Greetings from Finstudyclub. My name is Ankur Kulshrestha, welcoming all viewers to the session on inventory analysis. We are going to focus upon the analytical aspects which should bother an analyst while looking at the inventory policies. Fairly a small video. Let's just understand different aspects which the analyst should keep in mind while looking at the financial statement from the inventory point of view. The change in the inventory balances. Now here the perspective is in terms of the quantity. For a manufacturing firm, the analyst might find three levels of inventory, which is raw material, WIP, and the finished product. Now if you look at it, if the inventory and WIP levels have gone up, let's say compared to the last year, it might signal that the company is expecting a higher demand in future. So to that extent, the analyst should give them a plus. Obviously, it should also, or should I say, it might also signal that company must be getting a good offer from the supplier, and just to get a good discount deal, they would have hired, or should I say, they would have purchased a large amount of raw material. This may be a one-time event and might not really signal any better future. So as an analyst, you should always keep in mind that everything can point towards two aspects. So you have to really play that probability game and take your best shot. Obviously, whatever judgments that you're going to make need to be vouched or verified by reading a lot of information from MDA or trade body or publications or director's report. There are so many other things which will give you a context to read the information that we are talking about. So keep that in mind, that as an analyst, your job is very, very difficult, because every signal might point you to two different aspects which are very, very categorically opposite to each other. Let's just also look at the second aspect, wherein we are saying that if the finished inventory has gone up but the raw material and WIP has not, it might mean that the demand for the finished product is not as much, which may lead to either the markdown of the inventory, or the company might have to lower down the prices in order to clear that inventory. In either ways, you will have to suffer a loss. If the company doesn't do either, then the existing inventory might become obsolete. Again, that will lead to the same amount of loss. So keeping that in mind, the analyst should give them a negative. So that you can make different n number of trends. So another trend that I have put here on the slide is, let's say the finished goods, the level of finished goods have gone up, but the sales have not. So again, it is pretty much similar to the above point, which is really a little negative news. So keep in mind that you might have different combinations for that. This particular aspect of X might mean differently for two different companies. Okay, let's say if it's a startup, then obviously something related to this third point may not be a bad thing, because obviously a startup has to be a little more optimistic, and they may be making a stock up for a bigger opportunity, because of which their existing sales might not have gone up, but they may be eyeing a very, very big order, because of which they must be stacking up the finished goods. So in that case, it may not be a negative signal to value a startup. But let's say for a mature company, or for a declining company, thing like that might become like a little negative. Okay. Another aspect that the analyst has to keep in mind is to, whenever you compare ratios like return on asset or any other ratio for that matter, current asset upon current liability, you should always standardize the assumptions. The assumption here is of let's say the method of inventory that you're following, LIFO versus FIFO. And for that, we have already recorded a video for method change. Okay, so from LIFO to FIFO, this is going to be retrospective, while from FIFO to LIFO, it's going to be prospective. So on and so forth. So there are different rules for that. So analysts should keep that in mind, and preferably, always it is preferable to convert from LIFO to FIFO, making the retrospective amendment and calculation of different aspects. So fairly a simple, session. I hope that the entire reading on inventory is clear. Should you have any query, please write to us at query@finstudyclub.com. We shall be more than happy to address. Till then, thank you. I look forward to speak to you in my next tutorial on long-lived assets. Thank you.